Hey guys, Lisa L McClain, CFEI, your certified financial educator and entrepreneur transformational coach. It's Winning Wednesday. Are y'all ready to get into this Winning Wednesday? Thank you for joining me on this episode of Winning with Lisa, where we win, we win, we win. And today we are talking about cash. Stay tuned on this channel, Winning and Delivering Golden, and we'll get into it in just a second.
You got this. You gotta believe. Yes, you can do it and receive. Have faith. Trust in God. Put your all into it. 'Cause we win, we win, we win. You're winning with Lisa.
Hey there. Welcome to Winning with Lisa. Hey guys, we are back. Lisa L McClain, CFEI, your certified financial educator and entrepreneur transformational coach. We're talking about cash today. I want to make sure that we understand the importance of cash flow as it relates to your small business. Cash flow is the inflow and outflow of cash within a business, and it plays a vital role in the financial health and sustainability of a small business. Now, revenue, that's that line on your income statement. That's your income, right? But it's not the same as your cash flow. And so that's why we're talking about cash flow today. Cash flow enables the business to sustain its operations, guys. It helps us to meet our financial obligations and also invest in growth. And so a business with that strong cash flow management is going to be better positioned to navigate its challenges, capitalize on opportunities, and maintain our financial stability. So both revenue and cash flow are important to the small business, but they serve two different purposes and reflect different aspects of the business's financial health. So let's talk about revenue. Revenue refers to the total amount of money generated from the sales of your goods and your services. It represents the top line. Like I said, it's that top line of your income statement, and it indicates the business's ability to generate sales. Sales doesn't always mean cash in hand. So revenue is essential to the small business as it drives profitability and growth potential. And the higher revenue generally implies that it's an increased market demand and business success. Now, cash flow, on the other hand, refers to the amount of cash coming into and going out of your business over a specific period. Cash flow reflects liquidity and the ability of the business to meet its short-term financial obligations. We got to have that cash to be able to pay our bills. And so that positive cash flow is going to be crucial day to day in paying your bills, in paying employees, buying inventory. It ensures the business can cover its expenses and maintain that healthy financial position. So while revenue, again, it's an important indicator of business performance. It lets you know how your sales are doing and how you can attract sales. That revenue does not directly represent the availability of cash, right? So cash flow problems, if a business has delays in receiving payments from customers, or if it has significant upfront expenses, this is going to be an issue. And that's why cash flow management is vital to sustain the operations and, again, like I said, maintain financial stability of your business. So that's the difference between revenue and cash flow. Here's some reasons why cash flow is what I say considered king. Liquidity. That's the positive cash flow into your business, and it ensures that you have enough cash on hand to meet your current financial obligations. Those immediate obligations, again, you're paying suppliers, employees, maybe you're paying rent, and other expenses. And so it provides the necessary liquidity, that cash flow, to sustain day-to-day operations. Another benefit of having good positive cash flow is working capital. You're able to have enough cash to sustain an adequate level of working capital. Working capital is your difference between your cash, your current assets rather, which is like cash, accounts receivable, and your current liabilities, your short-term debt, your accounts payable. So having sufficient cash flow allows us as small business owners to manage our working capital effectively. And it ensures that we can cover our short-term obligations and also fund ongoing operations over the long term. Another benefit, stability. Stability. Cash flow shows that a company is stable. It also shows that you have flexibility because when unexpected expenses come about, you have the cash flow to meet those expenses. Even when you have economic downturn and financial challenges, cash flow is going to be heavily relied on as being able to finance those things instead of having to go to external sources. Another benefit, investment. With cash flow, that means you can invest. You can invest in growth initiatives such as maybe you want to expand your operations, or maybe you want to purchase new equipment. It might be you might have some ideas to launch different services or products, and you're able to innovate when you have cash on hand, when you have that good positive flow of cash. And so this is going to be crucial because it helps you not to have to rely again on external funding or having to go into debt to service these things. So I wanted to make sure that we understood that cash flow is just as important, if not more important, than revenue. Your revenue is the sales, again, might not necessarily determine what the cash balances are in your business at the time, because when you have revenue, you're actually showing what the sales are, but you still might be waiting on a payment from a customer. So revenue has to be recorded once the revenue is earned. But what if that customer never pays you? Now you don't have that cash coming in, and you have to actually reverse out that revenue, and it becomes a bad debt because that customer has not paid you. And so that's why cash flow is very important. Striking a balance between generating revenue and managing your cash flow is crucial for the long term, again, that long-term success and sustainability of your small business.